So, is your account going up as quickly as what we're seeing the overall indexes go up these days? We're going to tell you why many people who own index funds, in fact, lag and fall short of achieving the performance of what's going on in the market. There are two different terms we're going to dig into on the program that really need some understanding by those that are seeking to retire. One is investment returns, and the other is investor returns. And we're going to tell you there's a bit of a difference between those two, but we're going to also give you some guidance on how you as an investor can get closer to those actual investment returns. Plus, we'll talk about something that more Americans over the age of 50 find themselves in, and that is the role of being a caregiver for a family member who has a health problem. I am included, of course, in that. I take care of my mother who is in or transitioning to an assisted living type of arrangement. We're going to share with you some tips on what you need to be doing, some strategies, if you will, to help you if you find yourself in that role, as many more Americans find themselves in that role. So welcome on in to the program here on Dollars and Cents, where we help you make sense out of all of life's decisions involving your dollars. One of Central Florida's longest running radio programs, also coming to you on a host of stations throughout the Central Florida region. Also a top 25 financial planning podcast. So if you happen to not be close to a radio on Sunday mornings, well, then guess what? You can access our program at any point in time, anywhere in the world, at any time, by simply going to our various channels on your favorite podcast platform, or even our YouTube channel, where you get to see a video of me waving my hands around as I do this program, because I can't talk without moving my hands. It's really hard to do. So when you go to YouTube, you get to see that because the camera's rolling, if you will, as we do the program. Any trouble finding our channel on your favorite platform, go to our website, nelsonfinancialplanning.com, and you'll see the icons. Click on them. You'll get directly connected, and voila, you will be on our channel. Once there, make sure you subscribe so you don't have to go through that little process again. My name is Joel Garris, certified financial planner, certified financial fiduciary at Nelson Financial Planning, where we got a team of certified financial fiduciaries who stand ready, willing, and more than able to help you improve your life with a successful and cost-effective financial plan. So before we get to all that, busy week for around the office. On this past Thursday, we had sort of night one of our annual client appreciation event. Beyond our quarterly educational events that we do for clients of Nelson Financial Planning, and in those educational events, we usually have dinner. Most of the time it's dinner. We do throw a breakfast in every now and then. We do one every quarter where we're bringing in portfolio managers or economists or other experts in the industry to help make sure that our clients understand the investments that they own and what's going on in the economy and the greater world that affects their ability to retire. But we also like to do kind of a fun one. And so we take some time out every year. Usually it's in kind of the month of October, to do just a celebratory event with our friends and clients of Nelson Financial Planning. This year's was at the Orlando Science Center, which, if you haven't visited lately, really kind of a gem or a jewel here in Central Florida. When the kids were young, visited quite a bit. So if you recall, the Science Center, and I guess it's changed out because when I came in and I looked down, they didn't have it anymore, but you would also always collect these plastic oranges in order to make orange juice. And I guess as Central Florida has changed, we don't make much orange juice anymore. So too has that display. But I recall that very fondly. Someone was telling me actually that they have a sloth at the Science Center as well. So anyway, just a great little jewel here in Central Florida. We encourage you, if you haven't been to it lately, to check out the Orlando Science Center. Anyway, fun night and an enjoyable evening with our friends and clients where we were able to see a beautiful sunset out there on the terrace on the 4th floor, and then have dinner in the dino room. So that's always interesting, eating with dinosaurs, if you will. So that was Thursday. So a fun event, but obviously busy. Another reason in particular why my week was as busy as it was is Monday through Wednesday of this past week, I was actually out in Los Angeles visiting a major investment manager, one of the largest in the world. They manage over $3 trillion. Stop and think about that. An investment organization that manages over $3 trillion. It is a trip that I try and make every year. Obviously, during COVID, wasn't able to make it quite during that period. But it's one of those things where we do this trip in order to sit down and talk with portfolio managers, talk with people in the know as to what's going on in Washington, talk with economists that have sort of the pulse of what's going on, and then the portfolio managers as well, who make the individual decisions about which stocks to own in a particular fund, because of course we at Nelson Financial Planning use actively managed funds in order to achieve better investment results over time for our clients. So just as we sort of encourage our clients to visit with us personally, face-to-face, then obviously that's kind of the exercise that we were doing, is visiting with the money, so to speak, on a face-to-face basis, so to gain some insight into what's going on. So we thought it would be good on the program to sort of share the political and economic and market insights that we learned sort of hot off the presses, given that it was just this past Monday through Wednesday that we were out in Los Angeles, and sort of what sort of the experts, if you will, are saying, or from that perspective. So we'll start with the political stuff, right? I mean, just over 2 weeks to go. Obviously, we're going to have much more to say on this, perhaps starting next week's show, the following show, which is the Sunday before Election Day. We're going to have a lot more discussion about politics and the impact and things like that. But no question, obviously, a very tense environment because this election really is so close. And I think, and I'm working on this thesis, so hopefully I'm not getting too far forward on my skis, but I think we will see a repeat of history. This is, I guess, the beginnings of my election prediction. And we'll see a repeat of history in, if you think back to the year 2000. Now, if you were living here in Florida in the year 2000, as I was, it was we were kind of the center of the universe. The hanging chads, all of that craziness. If you forget, the results of that election were undecided for 35 days until such time as some of the legal disputes wound up going all the way up to the Supreme Court and then getting decided. Probably going to see a repeat of that from maybe not here in Florida, but maybe Pennsylvania, maybe Georgia, maybe North Carolina. Take your pick. It seems that we might very well see a repeat of history. We're going to have a little bit more thoughts on this political side of the equation. I'm not going to get deep into that because we'll talk much more about that here in a couple of weeks just prior to the election. But stay tuned with us through the break here on Dollars and Cents with Joel Garris of Nelson Financial Planning. So on the program this week, we're talking a little bit about the perspective that we gained this past week in our travels out to Los Angeles to visit one of the world's largest investment managers. It was an opportunity for us to sit down and listen to political perspectives, listen to economic perspectives, and listen to individual portfolio managers talk about some of the opportunities that they're seeing across the board in the market as a whole. So on this show, we thought we would share some of those insights. Before the break, we were talking a little bit about the political side. We're going to have much more on that in a couple of weeks. But at the end of the day, we could certainly see a repeat of the year 2000, where you go a number of days and weeks before ultimately knowing what the answer is or who actually wound up winning the election. If you recall the year 2000 here in Florida, it came down to like 500 and change votes, and ultimately it was the decision that wound up taking a lot of time to ultimately come to that conclusion. I think we could see that same thing play out again this year. We're going to talk again much more about that in a couple of weeks when we do sort of a show that's fully focused on the election and what that might mean for you as an investor. Bottom line, though, on that, not to jump to my conclusion, if you will, that we'll talk much more about in a couple of weeks. But look, different sectors are going to do differently depending upon who wins, right? So in essence, when you talk to these professional portfolio managers, they're just running different scenarios of what might happen if, and seeing obviously, different opportunities depending upon how it all shakes out, but still seeing opportunities. As an investor, we would encourage you to be somewhat apolitical because, profit's profit and earnings are earnings, and investment return is investment return. And that's really the most important thing when you think about your retirement and your assets. We're going to shift to sort of the economic perspective here on dollars and cents. Thank you for joining us on this week's program. One of Central Florida's longest running radio programs, also a top 25 financial planning podcast. Make sure you check us out on our website to learn more about how you can connect with us directly at nelsonfinancialplanning.com. My name, of course, is Joel Garris, certified financial planner, certified financial fiduciary at Nelson Financial Planning, where our team of certified financial fiduciaries stands ready to help you improve your life with a successful and cost-effective financial plan. So economically, I think the perspective out there in Los Angeles earlier this week was that things were in, I guess, decent shape, right? So the only negative to that is that probably is going to keep the Federal Reserve a little bit more on the sidelines. But at the end of the day, when you think about things like the labor market and consumer spending, all of those continue to remain very, very strong. The main issue, I think, is the obvious one that nobody's talking about right now, and that, of course, is our debt. 2024 marks the first year where the interest cost is going to exceed the defense spending. That's usually not a good thing once you get to sort of that inversion or that tipping point, if you will. So that's kind of the economic side of things. For the markets, as we said on the show 3 or 4 weeks ago, expect dividends and international to be a larger driver of overall market performance. So the key there is make sure you're checking out your underlying investment allocation, right? Over time, if you've just kind of let it percolate along, you probably own much less dividend-paying companies, and you probably own much less companies that are based outside this country, understandably so, because of how strong growth has been, how strong U.S. companies have been. But if we think about the road ahead, you really do want to check out that investment allocation. Make sure you're well balanced across the board. And then the other comment is sort of be careful about the resizing of the Magnificent Seven. The Magnificent Seven has been driving the lion's share, the bulk of what's been going on in the market. It's that group of 7 companies. You know all their names. It's Google, it's Amazon, Facebook, Tesla, all that kind of stuff. They have very, very high values. And that's reflected in their stock price relative to their earnings that they're making. Resizing of that occurs, if you will, when not all of those expected earnings, in fact, come in. And to a certain extent, that could be what you see happening in the market. So certainly there's going to be winners and losers just in that group of 7, if you will. So the commentary there is to watch your individual stock concentration in your investment allocation. We talk about this frequently on the radio program. Our clients, when they come in to visit with us, we do something called an X-ray. It's courtesy of Morningstar software. It drills down past the funds that you have to actually look at the individual companies that you own inside all of those different funds. And you really want to make sure that those top holdings, the top holding isn't more than 5% of the portfolio. The top 5 or 10 holdings aren't more than 40%, 30% of the portfolio, because otherwise you start to get a little bit more concentrated. And then lastly, was able to gain some perspective on AI, which is always interesting. Despite, I guess, some of the rumors out there, not really seeing that as replacing humans. If anything, a lot of the studies and surveys that are coming out right now are confirming more and more that when people want advice or guidance, that they kind of want it from a human being. Humans kind of still interact better with humans. And so not seeing it replacing humans, if you will, but what it does do and what it will continue to do is to improve productivity. And that's where you really could, and they talk about this in relation to the economy as well, is look, if you're using AI to achieve productivity gains, then the implications of that economically are pretty dramatic, because that means that you don't necessarily have to do the same things that you used to do. You can do more value-added things as an employee or as a business if you're not getting bogged down into some of the more just easier types of tasks that ultimately AI can do. So they really do think of AI more as just opportunity to provide a productivity boost. We've shared with our audience here on this program that we have used AI for a number of years, involving when we prepare client tax returns. So the software that we use scans the documents, pulls those numbers off, and then makes a decision. That's the sort of the AI piece of it, as to where is the likely spot on a tax return for those particular numbers to go. Obviously, we have humans at Nelson Financial Planning that ultimately determine, hey, this is the right spot, this isn't the right spot. But to avoid that data input, you stop and think about what's involved with preparing a tax return. A lot of data input, right? A lot of putting numbers into the software. So if you eliminate that, then that does increase productivity, right? That gives you the opportunity to look more deeply at the tax return for, hey, what's really going on here? What are some of the ways that we might be able to improve this situation? So great example of how AI ultimately helps. Another good example is, if you've been a client of the firm for a long time, we take a lot of notes and have a lot of conversations with people over the course of years. And so what AI can sort of do is kind of look at all of that and ultimately sort of boil down a summary that you can obviously get to much, much faster than if you're reading, 30 pages of notes kind of thing. So, not necessarily eliminate the value of human interaction, but certainly increase productivity, which I think is an interesting piece of this that is going to have widespread economic implications. So that's kind of the key takeaways, if you will, from our trip to California earlier this week. Some interesting insights on sort of the political, economic, and sort of the market fronts. We're going to have obviously much more on the political as we get even closer to the election. So as we say on the program, stay tuned because we do this show every week, and every week there's always something to talk about. So with that, we'll take a break and continue here on Dollars and Cents with Joel Garris of Nelson Financial Planning. So more often, people find themselves in the position of being a caregiver for a family member with a health problem or a disability, and certainly that's never easy. If you find yourself in that position, or if you found yourself in that position, you know full well that is an understatement to say that it is not easy. You can certainly only appreciate that if you've been in that position. Unfortunately, more and more of Americans, particularly in our 50s, find themselves in that position, me obviously included. And on this segment, we wanted to give you some things to maybe help you get organized or to help you better prepare. The past couple of weeks, I've been reading the book called The 36-Hour Day, which is a pretty good resource for Alzheimer's, dementia, and all those related diseases that helps to really give perspective on a wide range of things. So if you're dealing with that, looking for a good resource, I would really recommend the book, The 36-Hour Day. It's available on Amazon and probably 100 other places as well. But we'll talk a little bit about, kind of some of the thoughts on that here on this segment of Dollars and Cents. So welcome on into the program. This, of course, is where we help you make sense out of all of life's decisions involving your dollars. One of Central Florida's longest running radio programs, also a top 25 financial planning podcast. Make sure you check us out on your favorite podcast platform or even our YouTube channel. Just look for us at Nelson Financial Planning, or if you have trouble finding us, go to our website, nelsonfinancialplanning.com. The icons are right there in the upper left corner, and you can click on them and then get immediately connected as well. My name, of course, is Joel Garris, certified financial planner, certified financial fiduciary at Nelson Financial Planning, where we got a team of certified financial fiduciaries, one of which, Zach Keister, is going to be joining us next week on the program. They all are ready to help you improve your life with a successful and cost-effective financial plan. So the stats are pretty compelling on this, right? More than 1 in 4 Americans ages 50 or older are now caregivers. Even more dramatically, 1 in 10 actually find themselves juggling the care of 3 or more people. It's pretty dramatic, pretty exhausting too. So what are some of the things you can do to kind of help with these particular issues and to help reduce down the frustration and the stress that sort of comes from being a caregiver? So, there's obviously some basic things that, you need to remember in these particular situations, which I frankly find myself reminding myself on a regular basis when I'm trying to help my mom out. She had a stroke, I think now almost 3 years ago, and then since then there's been other sort of complications that have happened. Anyway, I think the most basic, obvious suggestion when you find yourself in a role of a caregiver is to try and be patient, right? To try and be calm, because even though the person may not be able to communicate as well as they used to, they can still sense, they can still feel. And so if you're upset or agitated or rushing, that's only going to sort of frustrate and agitate the situation as a whole. So I think number one, you can be patient and be calm. Which gets me, I guess, directly to number two, is that if you can't be those things at a particular moment in time, then it's important to take a break and seek help, go outside, maybe join a support group, all of those kinds of things. So obviously, those are sort of the basic, obvious types of suggestions when you find yourself in that situation. Not that different from when you had kids, if you think of it that way. But from a financial perspective, that's where I think it's important to sort of take an assessment of what's what, right? What you own, what you owe. We talk about that all the time on the radio program. What's the income? What's the expenses? Really trying to get on top of that information, particularly before the individual that you're giving care to is not able to help at all in that search or that information that you need in order to create that financial assessment, to get that perspective as to what's going on. And then, of course, with the expenses, right? I mean, if you're giving care, then we know that, a disease like Alzheimer's or dementia, there's not some magical cure. So the cost of care is not some magical cure. The cost of care is only going to go up. So got to make sure you're including that in kind of that assessment of the finances. And then we would also say to certainly take stock of the legal documents that are in place, right? You have to have capacity. The individual has to have capacity in order to properly execute things like a power of attorney or a healthcare surrogate. Any legal document, if you're going to sign it and for it to actually be valid, the person signing it has to have the legal capacity, the cognitive capacity to be able to understand what it is that they are signing. Now, last week on the program, we talked about some of the things, the 4 questions to ask yourself before you even get to the point of drafting estate documents. The questions to be asking yourself to ensure that you're going to create a successful estate plan. Obviously, chief among those is who gets to make the decisions, the power of attorney, healthcare surrogate. Those are pretty important documents, particularly while someone is still alive. Those documents go away once somebody dies. But if somebody's still alive and you need to make decisions on their behalf, that's what a power of attorney, that's what a healthcare surrogate is all about. So I guess those are sort of the 4 keys that we wanted to just chat a little bit about. It's been on our mind for a bit. It's on our mind all the time because as a caregiver, you have to have that somewhat on the back of your mind, at least at all times. And then what what you need to ultimately succeed on that, not just from a practical perspective, but from a financial perspective. Would highly recommend the book, The 36-Hour Day. I think that's a great resource for folks that are trying to figure out what all of this means. And I guess most importantly, remember to breathe, as with everything, right? It can be a frustrating experience, and probably only going to get through it. Much with the only way we ever get through life is with a little perspective and patience, and of course, humor as well. So just thought I would spend some time on talking about that topic here on the program. Obviously something that is near and dear to our hearts, and certainly something that we're dealing with on a personal basis as well. So I thought I would take a segment and just chat that one through. Again, the book is called The 36-Hour Day. Highly recommend that if you find yourself, as more and more Americans do, in that caregiver role for people that are having health or disability types of problems, particularly of those of the Alzheimer's, dementia, or that whole category of cognitive impairment that many people find themselves, unfortunately, having to deal with. Not fun at all. Not fun as the caregiver. Let me tell you something. It's also not fun for the person that is experiencing that as well. So a little perspective on that, as with anything in life, goes a long way. So we'll shift gears a little bit, and then let's just recap kind of those key points, if you will. The obvious ones, be patient and be calm. Take a break, seek some help, maybe find some support groups, all of those kinds of things. I think that also applies to raising kids as well, those first 2. So some universal applicability on all of this. And then again, on the financial side of things, make sure that you're really doing that assessment, taking a look at what that individual owns versus what they owe, what that picture looks like, and then, what's the income that's coming in, what's the expenses that are going out. How does that change should you need to transition them to a different living arrangement? Does that mean that you're selling the house? There's some cash there. And ultimately, then that helps to change the ultimate expense picture as well, along with kind of the asset picture. And then make sure you understand those legal documents and the importance of them, and making sure that they are in fact valid and that the right people have been chosen to make those decisions. So when we come back on the program, we're going to talk about investor returns versus investment returns. It sounds like they're the same thing, but in reality, they're really not. So we've got much more to talk about on that coming up next here on Dollars and Cents with Joel Garris of Nelson Financial Planning. Make sure you check out our website at nelsonfinancialplanning.com to learn more about us. So welcome on back into the program. On this segment, we're going to talk a little bit about investment returns versus investor returns, right? They sound like they're kind of the same thing, but the reality is they're actually quite different, particularly when you start to look at what those numbers mean. So here's an interesting statistic, courtesy of the folks at Fidelity. If you look at the S&P 500, they measure this as of June 30th. So the S&P 500, a trailing one-year return, so year-over-year return as of June 30th of this year, S&P 500 was up a little over 24%. Yet, the average IRA account balance grew by only 14%. And for larger IRA accounts, balances in excess of $1 million, they only grew by 6%. So what's going on with that? What is the reason that investors are not getting all of the investment returns that they should be getting? So we're going to talk about that on this segment here on Dollars and Cents, where we help you make sense out of all of life's decisions involving your dollars. One of Central Florida's longest running radio programs, coming to you on a host of stations throughout the Central Florida region. Also, one of the top 25 financial planning podcasts. So make sure you check us out over on our website at Nelson Financial Planning if you're looking to connect with us directly on any of our channels, on any of those platforms. My name is Joel Garris, certified financial fiduciary at Nelson Financial Planning, where we got a team of great folks who also happen to be certified financial fiduciaries as well, that stand ready, willing, and able to help you improve your life with a successful and cost-effective financial plan. So let's set the stage for this conversation by really drawing the difference between investment returns versus investor return. So an investment return is what we see sort of all the time. That's what people talk about. It's what gets quoted. It's what gets referenced, because that's the available public data, right? So if you've got a fund or a stock or whatever the case may be, then we all know how to sort of calculate the investment returns on that particular investment over a specified period of time. And so when you think of it, that's what you need to understand about investment returns, is that investment returns are reported as if you bought at the beginning of that measurement period. So if the investment return over a 3-year period of time is X, then it's looking at, okay, go back 3 years. That's the start date, if you will, all the way to the end date. That's the measurement period. Also, the assumption when you look at investment returns is that you are going to be reinvesting all of the income, all the interest, all the dividends, all the capital gains that comes from that particular investment. That's a key part of investment returns, because historically dividends, for example, have contributed over 40% or nearly 40% of the performance of the overall market over the past 100 years. So you can see where, wait a minute, that reinvestment piece, that's a big part of this definition of what it means to have a particular investment return. And then lastly, you never cashed it out. You didn't move out of it and back in or whatever the case may be. So understand those three components. There's a specific period of time, a measurement period, in order to that investment return covers. There's the assumption that all of the dividends, all the interest, all the capital gains winds up getting reinvested, and then that you actually owned the investment for the entire measurement period, meaning you never cashed out. So I guess that's the key piece. Out of all of that, those three parts of that definition of what an investment return is, the key piece is the never cashed out part, right? So, and that's probably the biggest reason why investor returns, what someone actually gets when they're owning a particular investment, in fact, never actually really matches the actual investment return of the particular investment, because investor returns, well, now you're introducing those tricky little humans into the mix, and actual human behavior involves things like taking money out of investments, moving money around, all kinds of things. The reality is that if you think back to that statistic we gave from Fidelity, it's pretty dramatic, though, the gulf. It's not just a little mistake here, a little mistake there. The reality is that when we talk about investor returns only being about 60% of investment returns, that's a problem. And we certainly can understand that, right? There's a lot of ways to get distracted. Did we mention there's an election coming up in a couple of weeks? That may be a chief distraction that's going on right now. But all of this data sort of connects back to some of the performance gap data that we shared on a prior show, I think probably about a month or so ago, about the latest Morningstar Mind the Gap study. Showed that for the 10 years ending December 31, 2023, investors as a whole earned about 1.1% less in terms of the performance, investor performance relative to investment performance. So 1.1, that doesn't necessarily sound like much, but if that's per year for a 10-year period of time. So cumulatively, that winds up being, more like 13, 14, maybe even 15% if you kind of run the math on that and put the power of compounding in that. So that's a pretty significant gap. For sector funds, so funds that look specifically at a particular sector, maybe it's financial services, maybe it's technology, maybe it's consumer staples, whatever it is, that gap actually is even greater. So investor returns fall short of investment returns by about almost 3%, 2.9% per year over a 10-year period of time. Well, that's almost a 40% differential, which sort of measures up or matches up with kind of that statistic that we were sharing earlier in this segment that was from the research that the folks at Fidelity did. So what can you do, right? What can you do with all of that? How can you narrow that gap between your investor performance, your personal performance, if you will, and the actual investment performance of the funds or investments or stocks that you own? Well, three things sort of come to mind, if you will. Number one is you probably want to stick with the broadest possible allocation. If you think back to those statistics we were sharing about the gap involving sector funds being 3 times as much as the gap just in broad-based diversified types of investments, well, then that'll give you at least an indication of maybe I just want to stay away from the sector stuff altogether and get a little bit closer to what the actual investment return might be. Number two, don't overreact to the headlines, right? Jumping in, jumping out is probably the biggest factor that undermines your results. I think there's a key concept here. The news is not interested in being right. The news is only interested in being heard. Stop and think about that distinction for just a little bit. And if you're letting the news or the headlines or whatever it is that you read out there on the internet ultimately drive the decisions that you make with your investments, then you're going to just widen that gap between your investor return and ultimately what the investment return actually is. And then lastly, seek professional advice and counseling. Some of the biggest roles that we serve at Nelson Financial Planning is to provide that perspective. So whether you're using our firm or whether you have someone else that is helping to provide some advice and guidance, the bottom line is they should be helping to bring some perspective to what's going on out there on a regular basis, and that perspective really does help to maintain that consistency that you need in order to bridge this gap that occurs between investor performance and investment performance. So make sure you're working hard to bridge that gap, because that's the only way to achieve the best possible investment results. With that, we're going to wrap it on up and get on out of here. Thank you for listening to the program. If you're interested in learning more about who we are at Nelson Financial Planning, or taking advantage of our absolutely free consultations, we don't have account minimum, so come as you are, if you will. Wherever you are on your financial journey, we are here to help. That's one of the biggest reasons why we don't have account minimums. So to get connected, just go to our website, nelsonfinancialplanning.com. Have a great rest of your day. Thanks for listening to this week's program.